What's up everyone, it's Cody. You're probably wondering what's going on with Kodak, and should you be part of it? I'll go over why Kodak surged from $2 to $60, why I trade this stock, and more importantly, how you can sell puts on Kodak stocks to generate great returns with a much lower risk than buying the stocks outright. Let's get right into my part 1, why. Kodak has been a century-old company specializing in camera-related products. Kodak filed for bankruptcy in 2012 and stopped making digital cameras. Ever since, Kodak has been on a journey to shedding liabilities and selling valuable patents to stay afloat. It seems that everything changed when Trump announced a potential deal for Kodak to manufacture pharmaceuticals to fight corona. It's very likely that Kodak will receive a $765 million loan to launch a pharmaceutical division. Even though this is not a done deal, it's groundbreaking news for Kodak. Overnight, Kodak transformed from a company everyone almost forgot about into a new shining star. It's almost like the old saying, catch on fire and people will come for miles to see you burn. Of course, in a good way. Trading of Kodak has been halted many times over the past few days. When a trading is halted, it's usually because the stock price has been drastically going up, down in a short amount of time. This means that the stock is highly volatile. Part 2, why I trade Kodak. Momentum traders were leveraging the positive news to push the stock price higher. I totally respect the hype on Kodak and kudos to bring pharmaceutical manufacturing back to the United States. However, most people saw the surge in price would like a piece of the quick profit. Only a small portion intended to hold on to the stocks for the long term. Just as the stocks can continue to go up fast, the stock can also plummet overnight. If you're thinking about trading this stocks, there's nothing wrong with it. Just make sure that you understand the risks involved and set your portfolio exposure accordingly. If you're a beginner trader and you're thinking about trading this stock, you better have a trading plan. That means that you know at what price you will be buying the stocks at and also when you will take profit or stop losses. To do that, it takes a lot more work and experience. So if you're not ready for it, I'll suggest that you stay on the sideline. You're not setting yourself up for success in this case. There are plenty of other trades to make money on. I tend to stay away from these trendy stocks because it does not meet my investment criteria, and I do not want to own the stocks for the long term. More often than not, the trend will soon pass and the stock price will eventually adjust it back to its true value. If you enjoyed the video so far, I will appreciate if you can gently tap the like button, as these trendy videos are usually as short-lived as a momentum stock, but it still takes me a lot of time to make. Yep. Tap that thumbs up until it turns blue. Thank you, you're awesome. A good example would be Nikola, ticker NKLA. Nikola is the name after the godfather of electricity, Nikola Tesla. Nikola has been a trendy stock for the past few months. It's said that it will be Tesla's biggest rival, but the company has not yet produced a single electric car. The only certain thing is that Tesla is named after Nikola Tesla's last name, so Nikola is only left with the first name. If we look at the 6-month chart, we can see that it was trading around $10 before the hype, shot up to $94 at one point, and pulled back to around $30. If we put Nikola's 6-month chart and Kodak's 1-week chart side by side, we see a similar pattern of parabolic upward movement and eventually adjust it back to its true value. If you're really interested in owning Kodak stock for the long term, but you're not sure if the stock price will pull back more, I'll show you how to get paid to own the stocks you want to own at a cheaper price. Part 3, how to sell puts on Kodak stocks to generate great returns with lower risks. If you're new to selling put options, I'll suggest that you watch my previous video first to fully understand the strategy, then come back to watch this video. Coming back to my option chain for Kodak, the closest expiration date is August the 7th. If you really want to own some Kodak stocks quickly, you can sell the put option as soon as August 7th. A quick reminder, one contract of a put option represents 100 shares of the stock, so you'll have to make sure you have this amount in your account before you sell any put. You'll get paid a premium upfront when you sell the put option. You will only have to buy 100 shares of the stock if the stock price is lower than the strike price you sold the put for by the expiration date. For example, you can sell the put at $35, which is the current stock price when I'm filming this video. You can get paid around $925 upfront as premium. Setting aside $3,500 to earn a $925 in premium generates around 26% return in a week. If the stock price keeps going up, this put contract will expire worthless and you will get to keep all all the $925 premium. If the stock price is lower than $35 by the end of the expiration day, you will have to buy 100 shares of the stock at $35. Since you're already getting paid $925 up front, the true cost of owning the stock is around $26. So selling a put option at $35 allows you to get paid up front, and the worst case is to potentially own the stock for $26. Now, you might be thinking, what if I want to own the stock at an even lower price? That's not a problem. The lowest strike price you can sell the put on August the 7th is $20, and you will get paid around $225 as a premium. And this is roughly 11% return in a week and a projected 585% annualized return. The true cost of owning the stock will be around $18. The lower you go in strike price, the less premium you will get paid, because it's less likely for you to buy 100 shares of the stock. And you just witnessed how you can make money even when the stock price does not move in your favor. Selling puts allows you to make money whether the stock price goes up, down, or sideways. If you use this strategy to potentially own the stocks at a discount price, you'll get a good return, and it could be less risky than trading stocks outright. If you want to learn more about this selling put option strategy, join my private Facebook group to view my past trading position and bounce ideas around with like-minded investors. Click on the link in the description. Good job on staying until this part of the video, and you're all my true supporters. You all deserve to gently tap the like button for yourself. Don't forget to subscribe and click the notification bell and change it to all so you don't miss any future video. Thanks for watching, and see you next time.